to IGCSE Accounting. In this video, we will talk about the correction of error, adjusting the profit and loss after correction of the errors. Okay, let's have a look of one of the example in the textbook. Okay, this example is example number 8 in page 87. Okay, let me read out the question for you. Apple calculated profit for the year of end 31st of December 2018 is 9,100. So this is the calculated profit. However, she discovered the following errors. So I will talk about the individual transaction later. But let's have a look what we need to prepare. Prepare a statement of corrected profit for Apple once all the errors has been corrected. As per mentioned earlier, all the questions we need to read carefully. In this case, we no need to show any general journal. We no need to prepare suspend account. No, we just need to prepare a statement of corrected profit. All right, so I already prepared the statement. Let's have a look of it. So as you can see here, the profit before adjustment is 9,100. I already stated that. Just take note that in this statement, there is no debit and credit. All right. So let's have a look of the first adjustment that we need to know. The sales return journal was undercast by 18. All right. Sales return. Sales, we need to increase profit, right? Because more sales. But now, sales return is customer return it back. So my sales not that much. My sales not that much. Will it impact my profit or not? Yes, it will impact my profit. So by doing so, we need to less. Okay, we need to reduce our profit. What we need to do is less the sales return by adding the 18 here. Okay, so this is the first adjustment. Let's have a look at the second one. All right, the second one is saying that advertising of 40 paid by check was credited to the bank account. In this statement, it's correct because you pay your advertising fee by check, which is reduced bank, right? So reduce bank is an asset, reduce then is credit. So it's correct. Let's have a look of the sentence. And also credited to the advertising account. All right. Advertising account, when it increase, is debit. All right. The advertising is expenses, so that's why it have to be debit. However, in this case, it credit by mistake. So it actually affect the revenue. We need to adjust it. So by right should be debit and become credit. So 40, in order for make it correct, we need to double it up by adding to 80. So the actual by right should be 40 originally, because earlier Apple go and credit it. So which is not right. So when we do the debit, we need to double it out, which is 80. So now you can see here that we need to do 80. All right, understand? All right, next example. Next case we need to solve is a credit purchase 100 from JC was mistakenly credited to the account of Leo. For this case, as we can see here that this is one of the error happened in the one that not affecting the trial balance. So the trial balance will still balance because this is type of error of commission. Type of error of commission will not affect profit and loss. So that's why we won't ignore. That means we no need to adjust in this statement. Let's have a look of the next one. Okay, a sales of laptop used by the business for 240 was credited to the sales account by mistake. All right, so you see, laptop used by the business means that it's an asset. Okay, it's not the purchase and sales because this company maybe it's not IT company because it mentioned that the laptop is used for business. It's an asset. So when it's an asset, actually it will not affect your profit and loss. Okay, so but it actually go and credit to the sales account and increase the sales, which is not right. All right, not right. So what we need to do here is we have to reduce the sales by 240, which is I assume that earlier already done, and we need to do the adjustment in the profit now. So what we need to do is 240. Okay, the total is 338, and the adjusted, corrected profit now is 8,762. So this is done. Consider that's all for this particular case. We just draw some line to make it. This is the final one, and that's all. Thank you, and